Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody had a phenomenal day and a great weekend. Hey, want to thank you all for joining us for our Traders Summit last week on Friday. It was a very successful day, very successful event. The recording can be found at tradersarmy.com. Feel free to go watch the recording of the session. We've even chapter marked it so that it's easier for everybody to see and for everybody to get to. So go to Traders Army today. It's underneath the free trading videos. If you're not a free member, go ahead and go down to start your free membership today, and you can watch the recording. Also, next week on the 17th of October, October 17th to 24th, we're going to be having our free preview week. And if our free preview week is something you're interested in, go take a look. You're going to gain access to all of our live trade rooms for the week. Give you a chance to see what we do on a regular basis. And we essentially have six days a week that we do live trade rooms, twice on Mondays, twice on Wednesdays. So you're going to have access to all of those for the week. So go to Traders Army and learn a bit more. All right, let's go ahead and get started with our review. So looking at the ES, starting with the S&P, we are down 20 points this morning. And, you know, we had a strong move last week near the end of the week with the run higher, but then this is what we've done since then. So now on a daily chart, we've officially put in 2 consecutive lower swing highs and 2 consecutive lower swing lows. Very easier, much easier, more clean, downtrend is able to be determined here. And so we're looking on the small time frame for opportunities to get short. Now I will say last night I had this little level set up as a short opportunity. Price, this was a decent little wick over wick area. Price came into this level and then stopped me out in about an hour because it was off a 15-minute level. Very, very small risk, little stop out, didn't hold very well. However, we did come to the level just above, which would be this area here, and that was our high of the day. So that was our level that we identified in the NASDAQ. You can see that the NASDAQ hit our area and has been moving down from that zone and is continuing its downward trajectory. I think that what we would look for today is for price to continue its move southward. I think that if we get a little bit of basing here, you may get a breakdown opportunity below this level. I feel like, is there going to be some demand areas down here where we may see a bounce? Absolutely. On a 15-minute, we have the origin of this very strong move up here at 43.06, which I think is still a good entry point. This little sideways price before this touch. So here you got 1, 2, a little bit of basing would be our third touch before the level. Now, I do have a little bit of demand down here. I think your first target would be about 43.30, maybe 43.35 in here. If you wanted to trade a rally back up as an opportunity to get short, I don't really have a great level here to lean on. This area here is not too bad, 43.65 as a potential reversal level up in this range. I think ultimately, though, continued bearishness is what's in store. The technicals are telling me that. We did have a little bit of an attempt on the 4-hour off this little triple bottom session. If we get below this 43.53, though, I think that would really cement that we're going to continue to come back down a bit further. Looking at the NASDAQ. In the NASDAQ, we've rallied up once again, came off of that hourly level of supply. I think that if you missed it and you still want to give it a shot, the NASDAQ is actually a bit cleaner for this area right here on a retest if we pop back up. That's a pretty good level for price if it pops back up into here as another opportunity to get short, as we're looking for good supply levels as an opportunities to get into the bigger picture trend of the price coming down. And I really like the fact this is kind of a tweezer top on a rally back up. And so when you think about your impulse move, corrective move, the next impulse move would bring us down here. Now, I will say this. I've been looking at this area for a while as a potential eventual level for the NASDAQ, and that would be about a 15% correction down here to 12.5 would be about a 20% correction. I don't know that we're going to make it that far down, but a 20% pullback is going to freak people out, right? And that's really where, on a larger term time scale, right, larger term picture, pull back into here, that could be a really good opportunity to add to long positions looking at that on a weekly scale. So that's not day trading, certainly. That's longer term investing. But look at that as a potential to add to longer term positions. All right, looking at crude oil. So crude oil, Rocket Man burning up our fuel up here alone. I think is that what they say? It's for the Rocket Man, and it is flying high. And so on this one, we were looking at a couple of pullback areas last night. We just didn't get into any of them. As I think we were looking at, it was right here, and it just rocketed up and rallied up all night in the overnight session. And so now we continue to find demand areas below us, but I'm not even getting truly great breakout trades to get long. Theoretically, you had one last night above here, but you're not even really getting good breakout opportunities to get long. I think that that where are we going long term? If you go much further out, I think that this is a clear magnet for price. If everybody can see this drop base, very strong drop. This is the weekly chart. I think that 90 is a clear magnet for price. Now, did I expect us to go nearly parabolic to get there? No. Matter of fact, I think we're probably pretty well overextended, but could see a pullback into one of these levels. Keep an eye out on a pullback to retesting this high soon. That's 77 or so. I'm just not sure when that would happen. We may continue to rally higher. Until then, stay looking at long opportunities. And then gold. Gold is a whole hodgepodge of hot mess. It's like if you take a piece of white bread and then you put broccoli cheese soup on it, and then you put another piece of white bread on top, you get a soup sandwich. That's also known as a hot mess. The hot mess that is gold right now is just not a lot of great levels for me to lean on. There is a confirmation long down here. We came close to it without getting in. And so as I look at this, that's really the only one that I have. Matter of fact, I even have that on the wrong color. That should be a purple level. Still valid, but still a hot mess. A bit of a soup sandwich. This strong rally or drop, if you will, excuse me, this strong drop that we had here came after this strong rally. This was very news driven, but we've even gotten below the origin of that move. And so I think that the better probability is that we do continue to head down. If we get basing in this region, you could theoretically have a breakdown below 1750. I would keep that very much in mind. Those of you that are options traders, you can look to trade something in between this range. Maybe today in our options live trade room, Corey can take a look at that for a non-directional opportunity in gold futures. All right, let's take a look at a stock of the day. And the stock of the day that I want to go to is Apple. And the reason I want to go to Apple is because when I look at the daily chart, Apple has a pristine area of demand right here at about 135. Matter of fact, love this area of demand here at 135. This is a little rally base, very nice rally at a prior area of resistance. Now, the other thing that I can see is that we had on Friday, not quite a bearish engulfing, but pretty darn close. And so I think that there's two trades in here. I think that there's a trade for Apple to make it down to this region, because that would be our next impulsive move. And so for those of you that are interested in here, I think you've got this. And then after that, I think that your next leg up would be where it would kick back in. Now, that would be a decline from the high to the low of about 15%, which is very similar to the same level that we looked at in the S&P or in the NASDAQ. Remember, as Apple goes, the NASDAQ will go. As it stands right now, remember, Apple, Microsoft, Google, Facebook, they make up about 50% of the NASDAQ's total market cap. And so by knowing that, I want to take a look at the individual contributors to that. But I like this 134.82 by 132.85 area of demand. And so If you wanted to trade it down, you could then trade it right back up, remembering that we do have earnings coming up on the 28th of October. So you've got about 17 days before earnings comes into play. If you throw up your implied volatility, we're actually still fairly low on our implied volatility. It's not overly high, but it is definitely in the range where you would want to do a bear put spread if you wanted to get short. So the bear put spread would be the play. So that's all I have for today. Remember, if you are not a Traders Army member, go to tradersarmy.com. Join a free membership so that next week you can take a look at our free preview week. Until tomorrow, everybody, hope you guys have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.